Okay, today we're diving straight into the Colombo Stock Exchange, the CSE, specifically looking at that really pivotal week from September 29th to October 3rd, 2025.
Yeah, the week the experts call the momentum breakout week.
Exactly. And our mission here is to figure out how the all share price index, the ASPI, the main market gauge, managed to hit its highest point all year.
It closed at 22,094.89. That was a pretty hefty weekly gain of plus 2.29%.
A very decisive game. Okay, let's unpack this.
So the ASPI hitting a new year high, that's significant. It's not just a blip. It feels like structural confirmation of a real upward trend.
But just looking at the index doesn't tell the whole story, does it?
Not at all.
Because I saw the report noted that the total weekly equity turnover, well, it actually dipped a bit, came in at Rs 33.3 billion. So that kind of sounds like the breakout maybe wasn't super broad-based across the whole week. Does that concentration worry you?
That's a really sharp observation.
Yeah.
And it's why you have to look, day by day. The market did give us that high volume confirmation we look for. But it was really concentrated on one day, Friday, October 3rd.
Ah, right at the end of the week.
Exactly. Turnover spiked to Rs 9.76 billion that day. So that burst of demand, that specific push, it showed the committed money was there to break through resistance. That's what locked in the year high.
And you could see the market's view shifting almost immediately in the valuations?
Precisely. The average price to earnings ratio, the PER, it jumped from 9.51 up to 9.72.
Which, for the CSE, isn't a trivial move.
Not at all. It's significant. It really signals that investors are assigning a much higher premium to future earnings. They're buying into the whole macroeconomic story going forward.
So confidence is up, reflected in the PER. But where did that actual buying power come from? That brings us to the flows, right? The domestic versus foreign picture.
Yeah, and this is, frankly, quite remarkable. It really shows the market's current independence.
How so?
We saw a net domestic inflow of Rs 389.66 million.
Okay.
And the net foreign outflow, also Rs 389.66 million. They perfectly canceled each other out.
Wow. Exactly the same number. That's unusual.
It is extremely rare.
So what does that tell us, really? Does it mean foreign money is just irrelevant right now? Or, I don't know, does relying only on local liquidity create its own risks?
Well, it definitely shows a strong decoupling, at least for now, from global trends. I mean, the market broke out purely on local conviction, local money.
Right.
The upside is resilience, maybe, against external shocks. But the potential vulnerability, it's that reliance on concentrated domestic liquidity. The market becomes perhaps more sensitive to local policy changes or shifts in domestic interest rates.
Makes sense. So given it was domestic capital doing the heavy lifting, where exactly did they put that money? It sounds like it wasn't an all boats rises situation, more selective.
Very selective. We saw sort of a clear dual focus. First, a big push into high growth areas, especially export focused ones. Software and services, for instance, just exploded, up over 12%. And commercial and professional services gained nearly 8% and hit a new 52-week high. That suggests bets on global service demand, currency plays maybe.
Okay, that's theme one. High growth, export oriented. What was the second theme?
The second was looking towards hard assets and future capital expenditure, CapEx.
Ah, like construction, infrastructure.
Exactly. The materials sector saw a solid gain of almost 4%, and it also hit a new 52-week high. That's usually a strong forward signal. It implies investors are really starting to anticipate a pickup in domestic building infrastructure projects, the tangible signs of economic recovery taking root.
We should also quickly mention that one outlier, Demo, just to show how specific things were.
Oh, absolutely. Demo surged, was it plus 33.16%?
Yeah, something crazy like that.
Yeah.
Even while its broader sector, automobile and components, barely moved, only up 0.11%.
Right. That screams company-specific story.
Yeah.
It really underlines that you need to look beyond just the sector right now.
So summing it up then.
Overall sentiment, clearly bullish. I mean, the year high, the strategic rotation, it all points that way. But, and this is the key thing, that performance split, the bifurcation, means you have to be surgical.
So given this mixed, strong momentum, but really, really selective, what's the main thing you, the listener, should take away from this?
I think you absolutely must shift your focus from just general sector sentiment to really drilling down into specific corporate health and individual company risk.
Because the winners and losers can be so different, even in the same sector.
Precisely. We saw it with the report called Extreme Performance Bifurcation, even within typically high beta areas like diversified financials.
Yeah.
You had massive winners and big losers on the top movers list that same week. So when the market is this selective, a rising tide doesn't lift all boats equally. You've got to be critically watching the specific corporate risks to understand which stocks are actually sailing forward and which might be taking on water.